tuilinde Jumuiya Afrika Mashariki, tuwezeshe kuishi kwa amani, tutimize na malengo yetu. Jumuiya yetu sote tuilinde, tuajibike, tuimarike, umoja wetu ni nguzo yetu, idumu jumuiya yetu.
Customers and partners coming together, our purpose common, creating wealth and transforming lives. I don't remember, you are a member, we are united by equity. Equity are listening, caring partner, transforming people's lives. I don't remember, you are a member, we are united by equity. Equity are listening, caring partner, transforming people's lives. Serving the people with confidence and joy, moving together in honesty and trust, all dedicated to the call of duty, embracing change for prosperity. I don't remember, you are a member, we are united by equity. Equity are listening, caring partner, transforming people's lives. I don't remember, you are a member, we are united by equity. Equity are listening, caring partner, transforming people's lives. Reaching the people all over the world, quality services to communities, all stakeholders building with delight, and celebrating dreams coming true. I don't remember, you are a member, we are united by equity. Equity are listening, caring partner, transforming people's lives. I don't remember, you are a member, we are united by equity. Equity are listening, caring partner, transforming people's lives. And by His grace we all arise, to our Creator praises we sing, moving together every day we grow, our hearts so grateful forward we march. I don't remember, you are a member, we are united by equity. Equity are listening, caring partner, transforming people's lives. I don't remember, you are a member, we are united by equity. Equity are listening, caring partner, transforming
Esteemed shareholders, board of directors, management, staff of Equity Group Holdings PLC, ladies and gentlemen, I welcome you to the 22nd Annual General Meeting of Equity Group Holdings PLC. My name is Professor Isaac Macharia, the chairman of the Equity Group Holdings PLC Board of Directors. I will now ask Reverend Evans Miranga to start us off with a word of prayer. Reverend.
Thank you, Chairman, and good morning to you all. Let us bow for the word of prayer. Heavenly Father, we thank you for the gift of life and for the opportunity to gather today for this 22nd Annual General Meeting of Equity Group Holding PLC. Lord, we are grateful for your guidance, protection, and provision throughout the past year. We commit this meeting into your hands and ask for your wisdom as we review our achievements, as we make decisions that will shape the future of this institution. Grant us discernment as we make decisions and pass resolutions. We pray for the shareholders present and those watching us virtually. Thank you for the board of directors, the management, employees, customers, our regulator, partners, and service providers. We also thank you, Lord, for the communities we serve. Bless each one of them and reward their contributions and the commitment they give to the growth and success of this great organization. Our prayer is that, Lord, you will make Equity Group to continue to be a source of opportunity, prosperity, and positive impact in the lives of individuals, businesses, and communities. As we start, we ask for your guidance and blessing upon our chairman as he leads these proceedings today. Grant him wisdom, clarity, and discernment. May all that is discussed and resolved be for the common good and bring you glory and honor. This is our humble prayer of faith in the name of the Father, the Son, and the Holy Spirit.
Thank you, Reverend. Shareholders, today I am joined by your directors and other officers of the company, some physically and others virtually. Allow me to introduce those who are present here with me in this live stream. To my immediate left, Dr. James Mwangi, Group Managing Director and CEO. On my far right, Mr. Anton Morage, Group Chief Finance and Transformation Officer. And on my far left, Victoria Cherotich, Group Director, Governance and Strategic HR. To my right, Mr. Brent Marahe, Group Chief Strategy Officer. And to my immediate right, Lydia Dirango, Group Company Secretary. The representative of our external auditors, PricewaterhouseCoopers, Bernice Kemasha. The representative of our corporate lawyers, ALN Kenya, Mrs. Losa Duati Mutero. The representative of our governance auditor, Scribe Services Registrar, Mr. Bernard Kerago. Our sign language interpreters, Fiona Mweresa and Godwin Mwamba. Shareholders, we also have other members of the board who are attending this meeting virtually, and I'll proceed to introduce them as well. Mr. Jonas Mushosho, Non-Executive Director. Dr. Evanson Faya, Non-Executive Director. Mr. Samuel Mwale, Non-Executive Director. Mrs. Farida Kabata, Non-Executive Director. Mr. Nick O'Donoghue, Non-Executive Director. Dr. Lakshmi Shyam Sanda, Non-Executive Director. Mr. Obadiah Biralo, Non-Executive Director. Dr. Aloysius Uche Odu, Non-Executive Director. Engineer David Mutobo, Non-Executive Director. Ms. Elaine Ubarijoro, Non-Executive Director. I also wish to acknowledge the presence with us today of the founder of Equity Group and former chairman and shareholder, Dr. Peter Munga. Welcome, Dr. Munga. Esteemed shareholders, I will now call upon the company secretary to report on the registration and confirmation of shareholders and to confirm the presence of a quorum or otherwise.
Thank you, Chairman. The quorum for the annual general meeting is a third of the issued shares. I confirm that a total number of 13,270 shareholders holding a total of 2,103,273,138 shares, representing 55.75% of the shareholding, are attending this electronic annual general meeting. I therefore confirm that we do have a quorum for this meeting.
Having confirmed that we have a quorum present, I declare the meeting to be properly convened and duly constituted. I take this opportunity to thank our shareholders who have joined us from various parts of the globe. I now call upon the company secretary to read the highlights of the notice and agenda convening the meeting.
Chairman, I confirm that the notice and agenda of the meeting, as outlined on pages 283 to 291 of the Integrated Annual Report, was published in the Daily Newspaper, the Daily Nation, and the Standard on 29th May 2026. Additionally, the notice was published and is on the website even up to now. Chairman, we will take the notice as read by the shareholders, having been circulated on time. Thank you, Chairman.
Ladies and gentlemen, we will now commence the formal business of today's meeting. Shareholders, the 2025 Integrated Annual Report and the consolidated audited financial statements were made available to all shareholders through a publication in the local dailies, and the full report was made available on the company's website, as indicated in the notice convening this meeting, which was published on 29th May 2026. Shareholders, my report to you for the year ended 31st December 2025 is contained in the Integrated Annual Report on pages 16 to 17. I shall take the report as read. The integrated report remains accessible on the company's website. I encourage all shareholders to read the detailed statement for information. I will only give a few highlights of my statement. Distinguished shareholders, ladies and gentlemen, it is my pleasure to welcome you to this 22nd Annual General Meeting of Equity Group Holdings, PLC. I am pleased to report that despite a challenging macroeconomic landscape, your group remained resilient, agile, and purpose-led through 2025. Across East and Central Africa, easing inflation, strong liquidity, and improving investor confidence supported recovery. While in Kenya, monetary policy adjustments made in the late 2024 helped stimulate credit uptake and business activity during the year. Guided by our Africa Recovery and Resilience Plan, we pursued a deliberate strategy anchored on sustainable growth, diversification, and resilience. These delivered strong results. Earnings per share rose to 19.1 Kenya shillings from 12.3 Kenya shillings. Return on average equity improved to 26.7% from 21.5%. And return on average assets increased to 4.2% from 2.8% in 2024. During the year, the board further strengthened the group's governance architecture to keep pace with the growing complexity of our integrated financial services model. We broadened competencies at both group and subsidiary levels in areas such as risk, sustainability, technology, health, communications, and regulatory affairs. We enhanced gender balance and undertook a behavior and culture audit to test how our values of integrity and accountability are lived in practice. At the same time, we maintained proactive regulatory engagement and advanced the early adoption of IFRS sustainability standards S1 and S2. In 2025, the Capital Markets Authority, CMA, assessed the group's level of compliance with the CMA Code of Corporate Governance Practices for issuers of securities to the public, 2015 CMA Code, for financial year 2024. The group's overall score was a leadership rating of 93%, reflecting robustness, maturity, and effectiveness of its governance framework and its commitment to maintaining high governance and standards and continuous improvement across the group. The group also undertook its scheduled governance audit for the financial year 2025 in line with the CMA Code. The group achieved an exceptional score of 95.27%, underscoring the board's strong commitment to robust corporate stewardship and its effective, diligent oversight of the group's affairs. This year, as part of the group's strategic expansion of its insurance business, we will be seeking your approval later in this meeting for the establishment of new subsidiaries for microinsurance in Kenya and life and general insurance in the DRC, subject to regulatory approval. This expansion is intended to position the group for regional growth, deepen insurance market penetration, and create the governance and capital framework necessary to launch and operationalize the new business in Kenya and DRC. Our strategic market expansion continued to gather momentum. We secured additional insurance licenses and operationalized the health insurance subsidiary under Equity Insurance Group, bringing life, general, and health insurance under a more integrated governance and operating structure. This strengthens our capacity to deepen financial inclusion and wealth protection, while reinforcing partnerships with key multilateral and development finance institutions that continue to recognize equity as a trusted development partner with the ability to deploy capital at scale. On sustainability and social impact, Equity invested 99.5 billion shillings, the equivalent of $771 million, in initiatives across our markets, the largest such investment in our history. Through the Equity Group Foundation and our subsidiaries, this translated into meaningful outcomes in agriculture, health, clean energy, environmental stewardship, and social protection. These included intensified support to smallholder farmers across 5 markets, and the growth of one of the region's largest biodiversity mitigating loan portfolios. In addition, the establishment of Equity Afya clinics has resulted in the successful conversion of 87 scorers from the Equity Leadership Program into health entrepreneurs. With a presence in all 47 counties in Kenya and 5 medical centers in Kinshasa, DRC, the program has grown from 5 clinics in 2017 to 150 medical centers in 2025, with 145 centers in Kenya and 5 in DRC, extending quality healthcare to communities across the region. Technology remained a foundational pillar of our competitiveness and customer relevance. During the year, the group introduced over 180 new products and enhancements, scaled digital lending and automation, upgraded our corporate cash management platform, and strengthened our capabilities in artificial intelligence, cybersecurity, and digital fraud risk management. These investments contributed to lower fraud losses, stronger platform reliability, and an improved customer experience across our markets. As we look ahead to 2026 and beyond, we remain confident in the group's strategic direction and institutional strength. While risks persist, including climate change, cyber threats, geopolitical fragmentation, and intensifying competition, Equity remains well-positioned through regional diversification, robust governance, a deepening technology platform, and an unwavering sense of purpose. On behalf of the board, I extend our sincere appreciation to our customers, regulators, development partners, investors, subsidiary boards, and employees for their continued trust, commitment, and support as we continue building long-term shareholder value and meaningful socio-economic transformation across Africa. Thank you all. Shareholders, I now invite the Group Managing Director and CEO of the company, Dr. James Mwangi, to introduce the management team and to brief the shareholders on the year under review and the future prospects of the company. Dr. James Mwangi.
Thank you very much, Chairman. And taking cue from you, I recognize the presence of our founder and founding chairman, Dr. Munga. Thank you, Dr. Munga, for gracing this very special occasion. Ladies and gentlemen, welcome to our 22nd AGM. The group executive management team is highlighted on page 41 to 43 of the integrated annual report. Shareholders, my report to you for the year ended 31st December 2025 is contained in the integrated annual report on page 18 to 20. I shall take the report as read. The integrated report remains accessible on the company's website. Mr. Chairman, with your permission, allow me to make a short and brief presentation to the shareholders. We have acknowledged the executive that served during the year ended 31st December 2009. The organization structure of our group continues to enlarge with every approval of expanding the group. We are now a fully fledged financial group with banking business, investment banking business, and insurance business. And we are angling to strengthen our technology business. Shareholders. Beyond the organization structure, we see the opportunity of continuing to transform ourselves. The transformation is anchored on governance, as the chairman emphasized on, strengthening our governance structures, while at the same time looking at the strategic direction that this group will continue to evolve on, given the changing environment. Customers remain the center of our focus, and hence the transformation is about the customer in every aspect. Beyond the customer, the transformation is anchored on our staff and the people who deliver on our strategic intents. And lastly, is about our processes and our systems so that the enablement to the group is enhanced. So this alignment of governance, systems, staff, our customers, and the marketplace continues to anchor our direction in terms of our management. The evolution of the organization through this transformation is better positioning us to deal with the shocks in economic and operating environment, which have become a new norm. The global economic landscape continues to improve despite the consistent shocks, one after the other, for the last 7 years. From the local environment, we continue to see a dynamic operating environment in all the markets we operate in. We note that the 6 markets we have full-fledged licenses in continue to perform well and continue to provide us with opportunities for scaling our business. Going into the individual countries, we see the dynamics as reflected by the Euroboards, reflecting consistent improvement in each of the markets we are operating in. And looking at the perspective of the 6 countries we operate in, we see they are very well positioned among the largest economies on the African continent in terms of opportunities. And that then really brings us down to how to unlock those opportunities, and that informs the transformation that the group is going through. In terms of interest payments as a percentage of revenues, in terms of debt to GDP, we continue to see a strain on the ability to enhance debt borrowing within the region, and that continues to be a constraint. It's within this operating environment that the performance of 2025 would be viewed in. And we see a balance sheet that expanded by 9%, moving from 1.8 trillion shillings to nearly 2 trillion shillings, a growth led by the build-up of deposits at 4%, followed by shareholders' funds that grew at 32% and complemented by long-term borrowing from international companies. This has been deployed in growing our loan book that has grown by 8%, while at the same time looking at the opportunities and leading ourselves to utilize opportunities as they arise. Looking at the P&L, we see a significant improvement in efficiencies. As the global macroeconomic environment improves, we see interest expense declining faster and interest income holding as we optimize on efficiencies in lending. Net interest income growing by 17%, while non-funded income grew by 7%, giving us a total income growth of 12% from 193 billion to 217 billion shillings. Loan loss provision continues to decline, a reduction of 28% from 20 billion shillings to 14.5 billion shillings during the year, signifying the improvement in quality of our loan book. To strengthen the transformation that we are going through, we continue to hire highly competent staff, developing the capability of our staff through training, and that has seen the cost of our staff increase by 19%, while efficiency, particularly from digitization, has seen our operating cost reduced by 10%, having the total cost structure of the group reduced by 5%, and as a result of the total income growth of 12% and reduction of operating costs by 5%, profit before tax increasing by 52%, and profit after tax increasing by 55% from 48.8 billion shillings to 75.5 billion shillings. The profit attributable to shareholders increasing by 55% from 46.5 billion to 72 billion shillings, with the earnings per share increasing also by 55% from 12.3 shillings to 19.1 shillings. So essentially, we are seeing the effect of the transformation, the effect of all the efforts to transform, showing significant improvement of the P&L. The regional diversification of the banking business continues to strengthen, and we now have 50% of the balance sheet and the profit and loss contribution coming outside our core market of Kenya. And we see significant improvement both on return on equity on the subsidiaries and return on asset, almost bringing the regional subsidiaries to the same level of maturity in terms of profit contribution like the parent. When we look at diversification of business beyond the banking, we see insurance business and the non-banking business continuing to improve, relatively smaller in size compared to the banking business, but showing positive signs of growth consistently year on year, and giving us confidence that diversification will not just by regional diversification, but also on offering. In terms of efficiencies, looking at the financial issues, we see continuous improvement in core ratios, but we start seeing capital consumption. And I want to emphasize, when you look at the core capital to risk-weighted assets, it has dropped from 19% to 17% as we deploy and grow loans, as we migrate assets from low-earning cash assets to loan book. Capital consumption is accelerating, and that is one of the reasons that explains the need to think carefully about capital management. When we look at total capital to risk-weighted assets, another reduction from 20.5% to 19%. So both core capital to risk-weighted asset and total capital to risk-weighted asset is showing reduction as we reallocate asset to high-earning asset, as we register growth in terms of risk-weighted assets and asset leveraged on capital. Liquidity remains strong, but reducing from 64.7 to 57.4 as a result of enhanced the redirection of assets to high-earning assets following the change in macroeconomic activity. In terms of presence within the region, we see the group becoming more systemic in all the markets. We see we are number 2 in Kenya, DRC, and Rwanda. We see significant improvement with Uganda now taking 5th position, South Sudan taking 3rd position. And we are optimistic that the improved performance of Tanzania will see us improve over the years. In terms of impact, the group continues to have significant presence, and as Chairman said, an investment of 99.5 billion shillings in social investment and sustainability, with the biggest investment continuing to go to education and leadership development, supporting the real economy in micro enterprises, in agriculture, in youth engagement in economic activities, while at the same time investing in sustainability through energy and environment. So the group continues to provide leadership to ensure social and environmental sustainability in the markets that we operate, and continued execution of shared prosperity. Our shareholders, allow me to now focus on the proposed dividend payout. As we said, the earnings per share increased by 55%. Your board has proposed a dividend payout increase of 35% from 4 shillings and 25 cents to 5 shillings and 75 cents. As we said, a growth of 35%. This will then result in an increase in dividend payout from 16 billion shillings to 21.7 billion shillings, with the dividend payout ratio declining from 34.5 to 30.2, and dividend growth from 6.3 to 35% year on year, and dividend yield improving, remaining almost constant at 8.9 and 8.6%, with a dividend yield on par value enhancing from 850% 2024 to 1,150%. Shareholders, allow me to take a few minutes to explain the proposed dividend payout, which, as we see, is in compliance with the dividend policy of 30 to 50% payout of available for distribution. We've taken a conservative approach, paying at the lower end of the range, and it's because of the reasons we saw that as the group grows, it's consuming capital, and we have seen the capital ratios decline by 200 basis points during the year. We have also seen the region becoming the center of focus, with significant consolidation happening of the large enterprises, great global interest in acquisitions, great interest by South African and West African banks to enter into the region through merger and acquisition. So the environment, the competitive environment is changing. And the only way we could be able to retain our competitiveness in the marketplace is starting up to these global and regional banks that are now focused on the country. The foresight of taking a proactive capital build-up puts us now one among equals with the regional banks that are coming into the market, with the global banks that are eyeing, and has played very well as a defensive policy so that we can continue to operate without an amplified risk of a takeover or a consolidation from the market. Capital will continue to be the mechanism of coping with the shocks that we have seen consistently. The management has determined that shocks are the new norm, and our operational strategy should assume that shocks will continue as they have done. And as a result, it has forced us to build on shock observers, the first one being on capital enhancement, liquidity enhancement, and quality of asset portfolio. So as a result, we have retained dividend payout at the lower end of the policy or dividend policy of payout of between 30 and 20, but 30 and 50%. But this has helped us to remain well positioned to harness the opportunities that are making regional banks to become attracted to our region. And as a result, our outlook, because of this position, continues to be strong. We are seeing we'll be able to sustain a higher loan growth than the previous year. Our guidance for 2026 being on the range of 8 to 12.5% growth, up from the forecast we had given for 2025 of 5 to 10%. Our deposit growth is anticipated at 8 to 10%, at the same level that it was last year, but our interest margin, again, remaining constant. So it is this growth that we anticipated that has necessitated us to ensure our capital buffers sufficient to manage both the growth of the balance sheet and manage the growth of the loan book, and also to have a strong defensive position against new competition. Shareholders, I want to highlight that this year our NPLs are forecast to the range of 7 to 9, down from 8 to 10 the previous year. But as we have said, the subsidiaries continue to show growth. And again, we expect between 50 and 55% of our assets are now to come from the region, while profitability 45 to 50% of the profits being contributed by outside subsidiaries from our primary market. And that explains why it is important to focus on capital strength so that we could be able to unlock opportunities that the region is showing as we recover from global microeconomic. Mr. Chairman, let me stop there and thank you for the opportunity of making the presentation to the shareholders. Thank you, Mr. Chairman.
Thank you, Dr. Mwangi. Shareholders, the director's report was also circulated with the integrated annual report, and it is contained on pages 128 to 130. With your permission, I shall take the report as read. I now call upon Ms. Bernice Kemasha of PricewaterhouseCoopers, our external auditors, to read the external auditor's opinion, which is part of the external auditor's report, appearing on pages 135 to 137 of the integrated annual report for 2025. Ms. Barnes.
Thank you, Mr. Chairman. Good morning, shareholders. As indicated, my name is Bernice Kimasha. I am the Group Audit Partner responsible for the Equity Holdings audit for 2025, and I will present our independent auditor's report to you, which was issued on the 17th of March 2026. Mr. Chairman, with your permission, I'll take the full text of the report as read, other than our opinion, which I will proceed to read to the shareholders. And it reads that we have audited the accompanying financial statements of Equity Group Holdings PLC and its subsidiaries, set out on pages 138 to 254, which comprise the consolidated statement of financial position at 31st of December 2025, and the consolidated statement of profit or loss, changes in equity, and consolidated statement of cash flows for the year then ended, together with the company statement of financial position at 31st of December 2025, and the company statements of profit or loss and other comprehensive income, changes in equity and cash flows for the year then ended, and the notes to the financial statements comprising material accounting policies and other explanatory information. Shareholders, in our opinion, the financial statements give a true and fair view of the financial position of the group and the company at 31st of December 2025, and of their financial performance and cash flows for the year then ended, in accordance with IFRS accounting standards and the requirements of the Companies Act 2015. Thank you, Mr. Chairman.
Thank you, Ms. Kamasha. And now, I now call upon Bernard Kirago of Scribe Services Registrars, our governance auditor, to read the governance auditor's opinion, which is part of the governance auditor's report, appearing on pages 51 of the integrated annual report for 2025. Mr. Kirago.
Thank you, Chairman. Distinguished shareholders, I confirm that we, Scribe Services, have conducted the governance audit in respect of the year 2025. My name is Bernard Kirago, and I'm honored to appear before you today. Our engagement was really undertaken under pursuant to Section 211 of the Code of Corporate Governance Practices for issuers of securities to the public, 2015, and the Capital Markets Public Offers, Listings and Disclosures Regulations 2023. These are binding regulatory instruments that require listed companies to subject the governance frameworks to independent external scrutiny. Our assessment covered 9 thematic areas in accordance with the specifications that I presented above, around ethical leadership, strategic management, transparency and disclosure, compliance with laws and regulations, financial reporting, board independence and governance, board policies, systems, practices and procedures, consistent shareholder and stakeholder value enhancement, corporate sector social responsibility and investment, and sustainability. Our work involved a thorough review of board documents, committee minutes, internal policies, statutory registers, published reports, and publicly available disclosures assessed against the applicable regulatory framework and international governance best practices. The group achieved a score of 95.27 on the ICPSK Governance Toolkit. Our audit identified a number of commendable governance practices across the group, reflecting the board's commitment to sound corporate stewardship and its diligent oversight of the group's affairs. While opportunities for further enhancement were identified, we have provided the board with our recommendations, which have been received constructively and will be pursued through a structured implementation process. We are satisfied that the governance of Equity Group Holdings PLC is in line with best practice, and we have every confidence in the board's continued commitment to governance excellence. Thank you, Chairman.
Shareholder commitment to transparency and shareholder engagement. Shareholders were invited ahead of this meeting to submit questions and seek clarifications on the financial statements, as well as the resolutions set out in the notice convening this annual general meeting. All questions received prior to the meeting have been addressed, and the responses have been made available on the company's website for the benefit of all shareholders. We would, however, like to provide a further opportunity for engagement. Shareholders who wish to raise additional questions may do so using the questions button available on the meeting platform or through the USSD code displayed on your screen. While we will endeavor to address as many questions as possible, during the course of this meeting, time constraints may not permit us to respond to every submission. Any questions not addressed live will be reviewed and responses will be published on the company's website following the conclusion of today's meeting. I now invite shareholders who wish to ask questions or seek clarification to submit them through the available channels or proceed to dial in. Good morning.
Yeah, good morning, Mr. Chairman. My name is Stephen Irobo Kemani from Bika.
Thank you very much, Stephen, for calling. You can proceed to ask
Mr.
your
Chairman,
question.
I have 5 questions. First question is about the expansion. I heard that the management and the board are planning to expand to Egypt, to Mozambique, Zambia, and Angola. Is that true? Second is about the insurance. What is the bank? Why can't the board consider to be an insurance to be a standalone and the banking to be a standalone? So the insurance can be insurance sector can be listed in the Nairobi Security Exchange and we can buy the shares. For example, it's about what the cooperative bank and the CIC have done. So I have given that example. The part of the today is about the question is about what measures are taken to maintain the asset quality. The other question is about the cyber security, how the measures that are being taken, and what are the measures that are taken to reduce credit losses. And the final question is about directors' election. How does the board evaluate those directors that are being
Hello. It appears like Mr. Kimani has gone offline, but I think he had asked all his 5 questions plus 1, and we shall proceed to answer those questions later after we have taken more questions from other shareholders. Thank you. Shareholders, we are waiting for your dialing. Shareholders, it's your opportunity to ask questions that you may not have sent. I do hope that our lines are available for shareholders to call. Good morning.
Good morning, Mr. Chairman.
Please proceed to tell us your name, where you're calling from, and then you can ask your question.
Our lines are available for shareholders to call. Hello, can you hear me?
Yes, please go on.
Yeah, my name is Carl Ogola
Yes, Carl, go on.
from Nairobi. I'm an old acquaintance of yours. Firstly,
Thank you.
let me congratulate the board and the staff for the excellent results for 2025. I think those are very, very commendable given the circumstances we have just come through. My questions are this. What criteria does the board or the management consider when making an acquisition in a new foreign jurisdiction? And when are we likely to see equity in Angola, Mozambique, and Zambia? And will it be likely before the end of this financial year? Number two, thank you for the healthy dividend. Will the board consider in future a dividend reinvestment plan, or DRIP as it's known in some markets, as this in my view will assist in retaining cash within the group to help meet either expansion or mitigate risks and shocks? And thirdly, can the board consider a hybrid meeting for the future AGMs? Sometimes this technology is a challenge, as you have seen in the earlier call where you have dropped calls. And then lastly, I'm very pleased to note that Equity now actually holds quarterly public investor briefings. As far as I'm aware of a listed company in Kenya. And I really want to congratulate and encourage you to continue those quarterly briefings. Thank you.
Thank you very much, Carl. We will answer those questions after we have taken a few more from shareholders. Thank you. Good morning. Good morning. We can hear you. Please proceed to give us your name, where you're calling from, and then ask your question. It appears like the caller went off offline. Good morning.
Good morning, Mr. Chairman.
Good morning. Please give us your name, where you're calling from, and then proceed to ask your question.
Okay, my name is Mary Pauline, and I'm calling from Nairobi. Mr. Chair, I have few queries, and before asking those questions, let me congratulate your board for steering up the company during these hard economic times. My question number one is, what are the bank's key growth priorities for the next 3 to 5 years, and how will they enhance shareholder value? Number two, what measures is management taking to manage rising credit risk and maintain asset quality across the region? Number three, how does the board plan to sustain dividend growth while funding expansion and digital transformation initiatives? Thank you.
Thank you very much, Mary, for your very succinct questions. We shall be answering them shortly. Thank you.
Oh, okay, thank you.
Good morning and thank you for calling.
Good morning.
Yes, please give us your name, where
Can
you
you
are
hear
calling
me?
from.
Good morning.
Good morning, we can hear you.
Oh, you can hear me well, eh?
Yes. Go ahead.
Okay. Let me hope I'm clear. My name is Kimobo Daniel. Thank you, Chairman, and the board and the management of Equity Holdings for the excellent results in the year under review. I have 3 quick questions and maybe one clarification that I may want to seek. Number one, when you look at the subsidiaries and you look to cost to income ratio, I'm looking at Kenya, Tanzania, Congo, Uganda, and Rwanda. You see that cost to income of Uganda is still quite high at 56%. I don't know what will be done to bring this cost to income to maybe below 50 like Kenya and others. Number 2, when you look at the group profit, you look at the subsidiaries also. You look at Kenya, it has performed very well, Tanzania very well, DRC very well, Uganda very well. But when it comes to Rwanda, which has actually the lowest cost to income ratio, you see that the profit was flat at 5.4. So I don't know also what contributed to this. Number 3, I have listened to the CEO statement, and I have noted that the core capital in relation to risk-weighted assets and the total capital to risk-weighted assets, it is only somehow applying to 2 countries, DRC and Kenya. Because the other subsidiaries, if you look at those core capital, they are going up in the terms of percentage when you take the minimum and the percent and the capital that is there. So I have recently seen you clearly saying that it is being reduced so that the assets can be allocated to higher earning assets. So my question is this only applicable to Kenya and DRC, or even the other countries are also being affected by this? And then my comment or my clarification that I may want to seek is from the insurance. We see on page 138 that insurance revenue increased by maybe 2.5 times, yet insurance service expense increased 5 times from 813 to 3.02. And when I look at the note, I can see that there were so many claims, more than 5 times. So let me hope that those claims were genuine because they have grown by 5 times. And then, CEO Dr. James Mwangi, you being the initiator or the founder of Vision 2030, and our group has reached where it has reached. Where do you see this group in the year 2030, as you explained what you meant, but now you stopped being defensive, or the group now has stopped being defensive, it is now being offensive. Thank you very much, and I wish you a good year.
Thank you very much, Daniel, for your questions. We shall be proceeding very soon to answer those questions. But before we address the questions, sorry, there are 2 more. All right, sorry. Thank you. Good morning and thank you for calling.
Good morning, Chairman.
Yes, go ahead and give us your name and where you are calling from, and then proceed to ask your question.
Thank you very much. My name is Koskei Chipleting Lee, and a shareholder at the Equity Group. And also, currently I'm calling you from Nairobi, Kenya. So the first thing is that I want to congratulate you and the entire team for the great work that you are doing in the managing of the equity. Now, I have two questions. Number one, what were the main drivers behind the strong profit that we saw in the growth of the 2025, and how sustainable are they? My second question is, what is the management's outlook for earnings growth in 2026 and the next coming year of the 2027? And also my last question, Mr. Chairman, is how does the group plan to balance growth investment with shareholder returns in the next 5 years? Thank you very much, and have a good day.
Thank you very much, Mr. Koskei. I understand that is the last question. And before we address the questions that we have received from shareholders, we will first provide guidance on the voting process for the resolution set out in the notice convening this annual general meeting. To assist you in casting your votes, we will now play a short video outlining the voting procedure and the steps to follow when submitting your votes. Thank you. And kindly pay close attention to the instructions provided in the video. Thank you.
Welcome to the annual general meeting of Equity Group Holdings PLC. Once voting is open, you will receive a USSD code on your phone with guidelines on how to vote. You will then receive a prompt on your mobile phone or email asking you to key in and dial the code using your mobile phone. You will be required to follow the prompts to cast your vote. The voting process will be as follows. Registered members will key in and dial the code *483 *190# from any mobile phone network in Kenya, or *760# for Equitel lines. You will then be prompted to select your preferred language. Once you've chosen your preferred language, the next prompt will be as follows. Welcome to the Equity Group Holdings PLC. Reply with 1. Once you have responded, you will receive the following prompts. To approve the annual report and financial statements for the year ended 31st December 2025, together with the reports of the chairperson, directors and auditors, reply with 1 if in favor, 2 if against, or 3 to abstain. Once you have responded, you will receive the following prompts. Continue following the same prompts for all the other resolutions. Once the vote is made, you will receive a final prompt confirming that your vote is accepted. For voting through the livestream dashboard, you will receive an SMS with the livestream link. Once you click on the link, you will find the vote button on the dashboard. Click the button and thereafter click the voting options of your choice. Once completed, click the Vote for Motions button to complete voting. Closing of voting will be announced by the chairperson. Results of the resolutions voted on will be published on the company's website within 24 hours following conclusion of the AGM. Welcome to the annual general meeting of Equity Group Holdings PLC. Once voting is open, you will receive a USSD code on your phone with guidelines on how to vote. You will then receive a prompt on your mobile phone or email asking you to key in and dial the code using your mobile phone. You will be required to follow the prompts to cast your vote. The voting process will be as follows. Registered members will key in and dial the code *483 *190# from any mobile phone network in Kenya, or *760# for Equitel lines. You will then be prompted to select your preferred language. Once you've chosen your preferred language, the next prompt will be as follows. Welcome to the Equity Group Holdings PLC. Reply with 1. Once you have responded, you will receive the following prompts. To approve the annual report and financial statements for the year ended 31st December 2025, together with the reports of the chairperson, directors and auditors, reply with 1 if in favor, 2 if against, or 3 to abstain. Once you have responded, you will receive the following prompts. Continue following the same prompts for all the other resolutions. Once the vote is made, you will receive a final prompt confirming that your vote is accepted. For voting through the livestream dashboard, you will receive an SMS with the livestream link. Once you click on the link, you will find the vote button on the dashboard. Click the button and thereafter click the voting options of your choice. Once completed, click the Vote for Motions button to complete voting. Closing of voting will be announced by the chairperson. Results of the resolutions voted on will be published on the company's website within 24 hours following conclusion of the AGM.
Ladies and gentlemen, we will now respond to the questions from shareholders who dialed into the meeting. Whereas we have also received questions from the live stream and we find that the questions asked by the shareholders will take a substantial amount of time, we shall, as I indicated earlier, respond to all questions and the answers will be available on the website. I will now invite Dr. James Mwangi to lead this Q&A session. Thank you, James.
Thank you very much, Chairman. Let me take this opportunity to thank the shareholders for their excellent questions and really appreciate the commendations to the board and management for the performance of the year. I will invite our Chief Strategy Officer, Brent, our Chief Finance and Transformation Officer, Anthony, and our Capital Allocation Director at the group, John, and our Managing Director of the Insurance Group to take their respective questions, starting with Brent.
Great, thank you, James, and good day, everyone, and to the shareholders, thank you for taking the time to go through our results and have the questions you've put forward. So I'll take the questions around the expansion. I'll answer and complement what Angela will talk about in insurance, as well as the question around the key growth areas and how this will be shareholder accretive or value accretive to shareholders. And ultimately, this is a question about allocation of our resources, in particular capital. We do appreciate this is also linked to the dividends that we pay out to shareholders. It's really a question how we balance growth versus returns versus cash back to the shareholders. I would like to maybe point as a starting point, refer back to the performance of the group over the last 10 years and even beyond that, where if we look at the history of Equity Bank Kenya, in its initial years, the bank appreciated, and the founding chairman, together with the group CEO, appreciated that the real opportunity in our markets is really the people, the mass market, the micro, small, medium-sized enterprises, the farmers. And over the years, the business has reinvested in the banking business to increase its capacity to grow and lend to these segments. It took about 16 years for Equity Bank Kenya, from when Dr. Mwangi took the business, to get to a high returning subsidiary, which now pays in excess of 50% of its earnings. This is a clear demonstration of strategy converted into execution and converted into shareholder value. If you look at the performance of Equity Bank Kenya over the many years in which it has operated. There is no doubt there has been challenges over the last few years, but our allocation into diversifying the business across geographies and business lines has allowed us to weather the storms. So there is an element of a track record of creating value and paying out higher dividends to shareholders. This has come with the ability to replicate the model, as we've seen with our other subsidiaries, in particular DRC, as well as Tanzania, where these subsidiaries have generated returns almost comparable to Kenya. What is also important to highlight, as in the case with Rwanda, it has not only demonstrated our ability to replicate the growth and returns, but it's also now paying dividends. What I'm trying to point out here is that our diversification remains true to the original vision and opportunities we see in terms of the mass market, the SME, the consumers, the agriculture, so that structural opportunity remains in place. What I'm also bringing out is our ability to execute a strategy to not only have impact, but also create shareholder returns. So that's really, I wanted to bring out as I go into the question of the expansion into Mozambique, Zambia, and Angola. These are countries that we are reviewing, if I can call it that. These are countries that are neighboring our existing markets. You'll observe that we have an incremental approach to how we have geographically expanded. There is a natural synergy at the country level when we are expanding, and this has consequences in terms of the synergies we have when we set up our subsidiaries. Again, speaking to diversification, and this is more from a vertical perspective, the expansion into insurance is complementary to our banking business. One of the important observations investors should make from our business, especially the banking business, is we've established a very powerful distribution capability across our over 400 branches, excess of 90,000 bank agents, our 155 clinics, and more recently, our standalone pharmacies, together with our merchants, in excess of 1.4 million merchants. We have a very powerful distribution capability to reach this mass market that we are targeting. And what we're doing with insurance is essentially providing the factories, if I can call it that, to build products on which to layer on top of this infrastructure. So, speaking to the growth areas, you'll notice over the past few years we've received shareholder approval, and there was a question around splitting or setting up a separate holding company for insurance. This is not to say that we will look to unbundle and separately list the insurance business. What it does speak to, and it speaks to improving and enhancing governance and transparency and how we allocate resources and capital. The split up of the establishment of a separate insurance holding company is to essentially ensure governance, transparency of our business. Insurance is a very separate and different business to banking, which requires a different set of skills, governance, and management and leadership. But also importantly, it reflects our optimism that we have for our expansion into insurance. Penetration levels remain 2% of GDP. It's return accretive, growth accretive to the business. You'll notice in our most recent results as of Q1, the insurance business is growing faster, it's generating higher returns, And again, this is a function because of the infrastructure that has been set up by the banking business. So focus for the group remains on scaling up our banking business. There was a question around the cost to income and why it's high in some of the subsidiaries. The rationale for scaling up Rwanda a few years back with the acquisition of Bank was essentially to get that economies of scale. And you've seen that it is now generating the lowest cost to income. There was a question around why Rwanda was generating 5% earnings growth. That's a function because of exchange or translation, because of the exchange rate in Rwanda. On local currency basis, it would have grown 10%. And also because we wanted to improve our impairment or provisioning coverage, which the provisions almost tripled, that was the reason why Rwanda reflected that mid-single digit earnings growth. But you will notice it continues to generate the highest returns, the lowest cost to income, and in fact, its revenue did grow around 20% in local currency basis. So it remains growing. It was just a function because of the provisionings that we wanted to make as we look to grow the business. Maybe just to concretize the growth areas, it's to scale up the banking subsidiaries. We are interested in exploring the growth opportunities in other markets within the banking vertical. We are allocating more capital to the insurance business. You've seen as part of this AGM, we are requesting approval to set up in the DRC and a microfinance business in Kenya. There is a lot of investment that we will continue to make in the technology business, and we'll be making announcements in the preceding quarters on what we're doing there. And there's a lot of investment that we're making also in terms of the capacity, in terms of processes, skills that is required in the business. But Anthony, I'll pass on to you for anything to add.
Thank you, Brent, and good morning, shareholders. Maybe just to expand on a recurring question around expansion strategy and what's our key criteria for that expansion. And there was a question as to whether we are likely to make any announcements soon. Brent has covered from a strategic perspective what we are looking, why acquisition expansion strategy is a key focus. It's all anchored on our plan, Africa Recovery and Resilience Plan, with a stated target of 100 million customers by 2030. And as Brent covered, ensuring that we are connecting our various markets. So in terms of criteria from the board, we have a very disciplined criteria, and it focuses on a couple of issues. One is strategic fit. We remain an SME bank, largely focused on SMEs. So when we are assessing strategic fit, that's one of the key considerations. We also look for scale because we want to be an important player for us to be able to transform lives and make impact in our chosen market. We need to ensure we have the right level of scale. The other key consideration is we need to ensure that then there are growth opportunities. We look at the macro factors because at the end of it all, the expansion strategy must answer the question of we must be adding to shareholders' value. We have a set criteria from a governance and regulatory process. We follow that includes various approvals within management, board of directors, and ultimately shareholders. So any announcements would then follow within those guidelines. And right now, as we say, we're really scouting for opportunities in the stated markets. I think there's been the callers asked about Angola, Mozambique, Ethiopia. Those are markets that we continue to scan for opportunities and will respond based on the set criteria. Thank you, Brent.
John? Thank you very much, Chairman. I think just to respond and follow on to what Anthony and Brent have said, We continue to see areas of significant growth in our region, both in the banking businesses, but also in insurance and other relevant businesses. So we intend to keep the dividend policy at between the 30 and 50%, but on the lower end of 30% going forward, so that we can invest in these new opportunities that you're seeing. We intend to continue to deepen in markets that we're in. So in the 6 markets that we're in, expect to continue to see market growth, but also look at other opportunities. Thank you.
Ajira.
Good morning, shareholders. There were 2 questions on insurance, and I'll start with the question around insurance service revenue versus insurance service expense and the different rates of growth. Now, 2025 was the first year that we operated a composite insurance group. Prior to 2025, we were only operating a life insurance business, and by nature, a life insurance business underwrites long-term contracts with an average tenure of about 12 years. And so what usually happens with the life insurance business is that the earnings and the revenue are long-term in nature. Last year, we started underwriting general insurance and health insurance. Those businesses are short-term insurance businesses. A majority of the contracts they underwrite are 1-year contracts. And as a result, you would find that the unwinding of the expenses of the claims would tend to be higher over a shorter period of time. We expect that as the general and health insurance businesses in Kenya continue to scale, that ratio will even out. But it is simply a factor of the life insurance business being the largest contributor, driving about 99% of insurance service revenue, but having the shorter term businesses driving more towards the claims because of the nature of the tenor of the contracts. The second question that was asked was with respect to setup of a separate insurance group at the NSC. The shareholders will note that our insurance business to date has been able to distribute over 21 million policies to 7 million policy holders and 10,000 MSMEs. A large part of that success is the partnership between the insurance group and the banking group. The insurance group has been structured to be a lean operation focused on manufacturing and technical underwriting, but a larger part of the distribution is done by the banking group. So we see that we are able to provide accretive returns to the shareholder because of this partnership, and the returns that we see that are above market averages. We're currently sitting at 47% compared with market average return on average equity of 22%, is a direct result of the strategic decisions made by Equity Group to leverage on the infrastructure and also provide additional products to the banking customers.
Thank you very much, colleagues. Just broadly speaking on the issues that have been raised, Mr. Kimani, the issue of Mozambique, Angola, and Zambia speaks to a creeping strategy of expansion where we are following trade routes. So if you look at Angola, Zambia, and Mozambique, it is the route between Tanzania and DRC, where we are becoming major players. And as a result, we want to cross on the entire trade route. I think Ajira has spoken very well about the standalone insurance. The challenge is that we use the distribution capability of the financial group or the banking group. And as a result, there will be challenges of allocation of the reward between the bank on a basis of arm's length. But they operate independently, but optimize on investment that has been made. And that is why we would like the benefits to accrue wholly to the shareholders who have deployed the capital. I think the issue of cybersecurity, we have enhanced our capability, and that has also informed why we sought the approval of the shareholders to form a specialized technology group that will bring the capabilities in-house, because we have realized that there is no service provider who could be able to be agile, innovative, and as responsive and have the capability that is required given our ambition. This year, as last year, we'll continue to see improvement in the quality of our loan book. It's a major focus, but there is also a tailwind in the sense that the macroeconomic environment is changing. The region is increasingly becoming a fast growth region, and as a result, that has enhanced our ability to do better in debt collection. At the same time, maybe shareholders, I would like to draw your attention that we are also making good progress in recovery of written off loans, and we'll continue to see that becoming a major driver of performance. Turning to Carlo, I think I'm really glad that you appreciate the challenge of delicately balancing dividend payout and financing growth from internally generated funds. It's our determination, as John said, that if we pay 30% dividend out of distributable, available for distribution, then the retention of 70% would be able to fund like it has done over the last nearly 20 years. Our last time of capital raising was 2007, and as a result, we have funded all the regional growth using internally generated funds, and we are now seeing that we are becoming a systemic bank within the region. So we trust in that understanding of the shareholders that it will be missing a huge opportunity if we don't significantly expand in a region that most likely is experiencing a Southeast Asia movement, where we might experience 30 years or so of rapid growth. And that is what we want to ensure we have harnessed. In terms of quarterly public briefings and hybrid meetings, I think those are issues we have had. And given the request from the shareholders about services to shareholders, I'm glad to report that we now have managed to attract the former chief executive of Image Registrars, who most shareholders in Kenyan listed companies have dealt with, Victoria Cheliot, who is now heading the registry and the governance structures. And again, that she will be readily available to shareholders together with Phoebe Mashalia, who was with a deal group to support the shareholders and to provide information on a need basis. So we'll communicate effectively on them. I think, Mele, Khalil, you brought out the key drivers and whether we could anticipate sustained growth. I want to confirm to the shareholders that 2025 impressive performance was not a one-off. We are seeing the same run for 2026, and we are working very hard to outperform 2025 this year. And that also explains why we are confident that we will require capital to delight that growth. We are seeing early signs of momentum of growth, hoping that we are going back to our yesteryears, where we had very strong, sustained growth for over almost 3 decades. In terms of control of risk, the board has set up a risk board committee at the apex, and that is to oversee the risk, because that's the primary responsibility now of the board. It has been resourced with highly competent, highly experienced board members. I'm glad that the organization has been able to attract the former chief risk officer of the World Bank, a professor at MIT in finance, and is helping us to ensure the structures are really put in place. At the same time, we have chair of the IT committee, also very experienced, because we have two bold financial risks and cyber and technology risks that we are really focused on. As lightly said, it's a delicate balance between dividend payout and funding growth, and we don't want to dilute shareholders unnecessarily. So we'll continue to do. I think, Daniel Kimotho, thank you for excellent questions. I think I was very impressed that you could notice the challenges with Uganda, and lightly with Rwanda. Rwanda has been very well explained. It was a local challenge which we see them overcoming. Uganda continues to challenge us in terms of cost-income ratio, but has become really the focal point. When we focused on Tanzania, we turned around Tanzania and is now our best performing subsidiary despite being small. And we are now focusing singularly on Uganda to ensure Uganda becomes like the other subsidiaries. In terms of capital consumption, it is true Kenya and DRC are heavy capital consumers because they had a very low loan to deposit ratio. DRC has come from deposit to loan ratio of 23%. We're now up at 50%. Kenya is at 47%. Would optimize profitability if that ratio was between 65 and 70. And so it's almost nearly growing the loan book by 30%. Loan growth is 100% capital consumption, and that is why those two, because they are significantly big, and it's not just the growth of balance sheet, but it's the reallocation from cash and near cash assets into debt that the capital consumption is likely to be higher. But the good thing is that the yields and the returns will significantly improve with that reallocation, despite so that it will be capital effective in terms of, I think the issue of vision and where we'll be by 2030, it's our hope that we'll be in 15 countries. The criteria has been spelled out. We are looking at significantly large population countries because of inclusion. We're looking at countries that are not very well banked, so that the headroom and the runway is long enough to for the capital investment. And we're also looking at countries that are among the fastest growing, so that we can benefit from the tailwind effect. And the experience of DRC has really informed the decision to look at Ethiopia, to look at Angola, to look at Zambia, and to look at Mozambique with a view of having another four to five subsidiaries, because the last set of five, that is DRC, Rwanda, Uganda, and Tanzania, are now mature in terms of return on equity and return on assets, and have matched the performance of Kenya. Kosge, on new drivers of performance, as you can see, given the balance sheet size, we're now going from just interest-based earnings to non-funded income. And treasury and trade finance have become focal points. I would like to say the trade finance is really the spearhead of all our initiatives, also that we could support cross-border trade, and we could be very well positioned to do ecosystem banking particularly within the region. I want to confirm, Kosge, that the performance of last year is a new benchmark, is a new base for a new equity, and it was not a one-off. And we are building on that and expecting a significant improvement going forward as we unlock the synergies of size, economies of scale, and at the same time the benefits of digitization and use of technology as an enabler. So looking at the next 5 years, we plan to really significantly increase the balance sheet. And with the increase in balance sheet, will come to return on asset, enhance the return on asset. And so as shareholders, Kosge, you would really, we would then confirm that you have something to look forward to and in a sustained way of delivery of performance. I think the question of balancing between defensive and offensive strategy, if we had not really focused on capital mobilization through retention, would be experiencing a challenging period, working to defend our business from the aggressive offensive acquisitions happening. But because we were proactive, we now can also take a very offensive strategy, and that is also informed by the objective of being in 15 countries by 2030. I would hate to be in an awkward position of a small size where we become vulnerable to those who want to come to the market. So in terms of engagement, as we have rightly said, we have two now of specialized, focused members of executive to focus on shareholder engagement, so that as we make progress, we ensure our shareholders understand we are working together so that they could make the appropriate decision that are completely aligned to the strategy being pursued and the value being unlocked and created for them by the organization. Thank you, Chairman, for the opportunity to respond to those questions.
Thank you very much, James. Before we close this Q&A session, I think Mr. Kimani had asked a question about evaluation of directors as they join the board. And I would like to respond to that, as it lies squarely in governance. We have a very robust criteria and a process for selection of board members. We maintain a database of people who have been proposed to join our board, and that database is maintained by our company secretary, who does a desktop assessment of those proposals. And there is a criteria of giving or scoring these proposed members. The scoring is out of 10, and she maintains those who score more than 7 out of 10. And when we look at the fact that we desire a very diversified board or diversified boards that are fit for purpose, both at the group and in the subsidiaries, we have a skills matrix that is required in the board, and we map the abilities and skills of those names to the gaps that exist every time that we have a rotation out. And we look at both the exposure of potential board members. We look at what do they bring. We look at maintaining diversification, and especially when we look at the group, we look at global exposure of our group members. And of course, we want gender, age diversification, industry diversification. And once a vacancy arises and we are evaluating a potential board members, after the desktop evaluation, we have an in-person interview with a potential board member. And mainly here we are looking at the values and the culture fit of that potential board member. And then the names are presented to the various governance committees in the boards. And if the governance committees feel that this person or persons are fit to join our board, then they recommend them to the full board. And that is the only time that you get onboarded. To make sure that our board members remain engaged with the business and they execute their mandate properly, we have an annual evaluation of all board members. Again, the evaluation does give scores, and it is conducted by independent governance experts. We develop a board work plan for the year where the board will address the issues that come up during this evaluation, so that we keep strengthening our boards by looking at the issues that come up, and also by making sure that we have a well-planned board training calendar throughout the year. This is how we maintain our boards so that they are top of the ridge and they are able to execute their mandate of oversight and their mandate of giving strategic direction to the group. Thank you. Shareholders, I trust that you have given adequate consideration to all matters contained in the integrated annual report, and that we have answered satisfactorily the questions that have been raised by the members. We have now closed the question and answer session, and the responses to all questions, as I had indicated, will be published on our website. Shareholders, we will now commence consideration of the proposed resolutions. I will request the company secretary to read out the proposed resolutions with respect to Agenda 1 on the adoption of the financial statements, which are contained in the integrated report, pages 138 to 254, and to confirm whether we have a proposer and a seconder of the motion.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows: to receive, consider, and adopt the consolidated audited financial statements of the company for the year ended 31st December 2025, together with the chairman's, directors, and auditors' report thereon. Chairman, Philip Njema Kiragu has proposed, and Joseph Mutegituma has seconded this motion.
Shareholders, the resolution as read by the company secretary has been proposed and seconded. I now put it to the meeting for voting. I will now request the company secretary to read out the proposed resolution with respect to Agenda 2 and confirm if we have a proposer and a seconder.
Shareholders, the resolution put forward to you is as follows: to declare a first and final dividend of 5 shillings and 75 cents per share in respect of the financial year ended 31st December 2025, to be paid to the shareholders on the register of members as at the close of business on 22nd May 2026. Chairman, Karanja Kamau has proposed and Lillian Karegi Kiganga has seconded the motion.
Shareholders, the resolution as read out by the company secretary has been proposed and seconded. I now put it to the meeting for voting. I now request the company secretary to read out the proposed resolution with respect to Agenda 3 on the director's remuneration report and confirm whether we have a proposer and a seconder of the motion.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows: to receive, consider, and approve the Directors' Remuneration Report and the remuneration paid to the Directors for the year ended 31st December 2025. Chairman, Joseph Mute Gituma has proposed and Dina Margaret Kokwaro has seconded the motion.
Shareholders, the resolution as read out by the Company Secretary has been proposed and seconded. I now put it to the meeting for voting. We now proceed with agenda item 4 relating to the election of directors. The profiles of the proposed directors were posted on the website. I now request the Company Secretary to read out the proposed resolutions under this agenda and to confirm whether we have proposers and seconders of each motion.
Thank you, Chairman. Shareholders, the resolution put forward to you are as follows. Part A, to approve the appointment of Professor Isaac Macharia as a director, who in accordance with the Article 100 of the Company's Article of Association, retires from office by rotation and being eligible offers himself for re-election. Chairman, Dina Margaret Kokwaro has proposed and Estonic Mutungi Kinywa has seconded the motion. Part B, to approve the retention of Mrs. Farida Kambata as a director, notwithstanding that she has attained the age of 70 years, in accordance with the provisions of the Code of Corporate Governance Practices for Issuers of Securities to the Public, 2015. Chairman, Shadrach Tieng Ouma has proposed and Mark Dirangun Deritu has seconded the motion. Part C, to approve the appointment of Mr. Jonas Mushosho as a director who, in accordance with Article 100 of the Company's Article of Association, retires from office by rotation and being eligible, offers himself for re-election. Chairman, Alexander Mutune Waweru has proposed and Peter Ngotho Kabiru has seconded the motion. Part D, to approve the appointment of Dr. Evanson Vaya as a director who, in accordance with Article 100 of the Company's Article of Association, retires from office by rotation and being eligible, offers himself for re-election. Chairman, Rose Nyandiko has proposed and Stephen Irungu Kimani has seconded the motion. Part E, to approve the appointment, subject to regulatory approval, of Dr. Eliane Ubalijoro as a director who, having been appointed by the board on 23rd March 2026, retires from office in accordance with Article 101 of the Company's Article of Association and being eligible, offers herself for election. Chairman, Beatrice Wanyara Gatumia has proposed and Joseph Mwenda Mambutu has seconded the motion.
Shareholders, the resolutions on the election of the proposed directors have each been proposed and seconded. I now put them to the meeting for voting. Shareholders, Agenda 5 is to approve the election of the following directors to the Board Audit Committee of the company. Mr. Obadiah Bilaro, Non-Executive Director. Dr. Lakshmi Shaim Sanda, Non-Executive Director. Dr. Aloysius Uche Odu, Non-Executive Director. Dr. Evanson Faya, Non-Executive Director. I now request the Company Secretary to read out the proposed resolutions with respect to this agenda and to confirm whether we have a proposer and seconder of the motion.
Thank you, Chairman. Shareholders, the resolution put forward to you are as follows. In accordance with the provisions of Section 769 of the Companies Act Cap 486 laws of Kenya, to approve the appointment of Mr. Obadiah Biraro to the Board Audit Committee of the company. Chairman, Abdul Hakim Mudhoka Mbuvi has proposed and Dennis Mutuku Kimeu has seconded the motion. Part B, in accordance with the provision of Section 769 of the Companies Act, Cap 486 laws of Kenya, to approve the appointment of Dr. Alucius Ucheudu to the Board Audit Committee of the company. Chairman, Mercy Trufosa Joey has proposed and William Muigai Mwathi has seconded the motion. Part C, in accordance of the provisions of Section 769 of the Companies Act, Cap 486 laws of Kenya, to approve the appointment of Dr. Lakshmi Shyam Suda to the Board Audit Committee of the company. Chairman, Peter Kamande Masharia has proposed and Margaret Mudhoni Ikenye has seconded the motion. Part D, in accordance with the provisions of Section 769 of the Companies Act, Cap 486 laws of Kenya, to approve the appointment of Dr. Evanson Vaya to the Board Audit Committee of the company. Chairman, Emmanuel Obonyo Wayodi has proposed and Ruben Gitau Gisheha has seconded the motion.
Shareholders, the resolutions on the appointment of each member of the Board Audit Committee of the company has been proposed and seconded. I now put them to the meeting for voting. I will now request the Company Secretary to read out the proposed resolution with respect to Agenda 6 and confirm if we have a proposer and a seconder.
Thank you, Chairman. Shareholders, the resolution put forward to you is as follows: to appoint Messrs. Ernst & Young as auditors of the company until the conclusion of the next annual general meeting in accordance with Section 721 of the Companies Act, Cap 486 laws of Kenya, and to authorize the directors to fix their remuneration for the ensuing financial year in accordance with Section 724, Part 1 of the Companies Act, Cap 486 laws of Kenya. Chairman, Margaret Wambui Gitonga has proposed and Charles Mutahi Ndegwa has seconded the motion.
Shareholders, the resolution on appointment of external auditors has been proposed and seconded. I now put it to the meeting for voting. Shareholders, we will now proceed with the special business of this meeting. The first special business of this meeting is in respect to approval of incorporation of a micro-insurance subsidiary in Kenya to conduct and undertake micro-insurance business in Kenya as set out in the agenda. I now request the Company Secretary to read out the proposed resolutions with respect to this agenda and to confirm whether we have proposers and seconders of the motions.
Shareholders, the ordinary resolution put forward to you is as follows: that the incorporation, subject to obtaining the requisite regulatory approvals, of a micro-insurance company in Kenya, the micro-insurance company, as a subsidiary of the company through the company's insurance holding company, Equity Group Insurance Holding Limited, the insurance holding company, to conduct and undertake micro-insurance business in Kenya, including the company providing capital to the insurance holding company of a sum of Kenya shillings 192 million for the share capital of the micro-insurance company, as required under the Insurance Act, Cap 487 laws of Kenya, and also to cater for the operational expenses of the micro-insurance company, be and is hereby approved. Further, that the Board of Directors of the company be and are hereby authorized to take all actions necessary to effect the incorporation of the micro-insurance company, including but not limited to providing all approvals required from the company as a sole shareholder in the insurance holding company, executing and filing all necessary documents and agreements, and paying all associated fees and expenses, and put in place all the necessary structures, commercial arrangements, and any auxiliary arrangements relating to the conduct and undertaking of micro-insurance business in Kenya. Chairman, Rhoda Wairimo Kanja has proposed, and Peter Ochieng Zakaria has seconded the motion.
Shareholders, the resolution on approval of incorporation of a micro insurance subsidiary in Kenya to conduct and undertake microinsurance business in Kenya has been proposed and seconded. I now put it to a meeting for voting. The second special business of this meeting is in respect of incorporation of a life insurance subsidiary in the Democratic Republic of Congo, DRC, as set out in the agenda. I now request the company secretary to read out the proposed resolution with respect to this agenda and to confirm whether we have a proposer and seconder of the motion.
Shareholders, the ordinary resolution put forward to you is as follows: that the incorporation, subject to obtaining the requisite regulatory approvals, of a life insurance company in the Democratic Republic of Congo, the DRC Life Insurance Company, as a subsidiary of the company through the company's insurance holding company, Equity Group Insurance Holdings Limited, the insurance holding company, to conduct and undertake life insurance business in the Democratic Republic of Congo, including the company providing capital to the insurance holding company of a sum of United States $12 million for the share capital of the DRC Life Insurance Company as required under Law Number 15/005 of March 17, 2015, establishing the insurance code, the DRC Insurance Code, and also to cater for the operational expenses of the DRC Life Insurance Company be and is hereby approved. Further, that the Board of Directors of the company be and are hereby authorized to take all actions necessary to effect the incorporation of the DRC Life Insurance Company, including but not limited to providing all approvals required from the company as the sole shareholder in the insurance holding company, executing and filing all necessary documents and agreements, and paying all associated fees and expenses, and put in place all the necessary structures, commercial arrangements, and any auxiliary arrangements relating to the conduct and undertaking of life insurance business in the Democratic Republic of Congo. Chairman, Romeo Marinde Ogoya has proposed and Joseph Kasolo Mbuyaka has seconded the motion.
Shareholders, the resolution on incorporation of a life insurance subsidiary in the Democratic Republic of Congo, DRC, has been proposed and seconded. I now put it to the meeting for voting. Shareholders, the third special business of this meeting relates to the incorporation of a general insurance subsidiary in the Democratic Republic of Congo, as set out in the agenda. I now request the company secretary to read out the proposed resolution with respect to this agenda and to confirm whether we have a proposer and seconder of the motion.
Shareholders, the ordinary resolution put forward to you is as follows: that the incorporation, subject to obtaining the requisite regulatory approval, of a general insurance company in the Democratic Republic of Congo, the DRC General Insurance Company, as a subsidiary of the company through the company's insurance holding company, Equity Group Insurance Holding Limited, that is the insurance holding company, to conduct and undertake general insurance business in the Democratic Republic of Congo, including the company providing capital to the insurance holding company of a sum of United States $13,174,320 for the share capital of the DRC General Insurance Company as required under Law Number 15/005 of March 17, 2015, establishing the insurance code, the DRC Insurance Code, and also to cater for the operational expenses of the DRC General Insurance Company be and is hereby approved. Further, that the Board of Directors of the company be and are hereby authorized to take all actions necessary to effect the incorporation of the DRC General Insurance Company, including but not limited to providing all approvals required from the company as a sole shareholder in the insurance holding company, executing and filing all necessary documents and agreements, and paying all associated fees and expenses, and put in place all the necessary structures, commercial arrangements, and any auxiliary arrangements relating to the conduct and undertaking of general insurance business in the Democratic Republic of Congo. Chairman, Doreen Ogola Akoth has proposed and Marianne Kiranguri Ihiga has seconded the motion.
Shareholders, the resolution on incorporation of a general insurance subsidiary in the Democratic Republic of Congo has been proposed and seconded. I now put it to the meeting for voting. Shareholders, we have now come to the end of the special business. Voting will close at 2 p.m. and we encourage shareholders who are yet to exercise their voting rights to do so. The results, having been independently scrutinized by PricewaterhouseCoopers, shall be published within the 24 hours on the company's website. I will now ask the Secretary to confirm if there is any other business for discussion for which due notice was given.
Chairman, I confirm that there is no other business for discussion for which notice was duly given. Thank you.
There being no other business of which notice has been duly given, this marks the conclusion of the business of the 22nd Annual General Meeting of Equity Group Holdings, PLC. I take this opportunity to thank our shareholders for their continued support as the business navigates a dynamic and evolving environment. I also extend our appreciation to our stakeholders for championing our social impact agenda, to our board members for upholding the highest standards of corporate governance, and to management for their dedication in delivering strong results. I thank you all for attendance. I wish to acknowledge the shareholders who have joined this meeting from more than 24 countries, including the US, Ireland, Japan, Rwanda, Netherlands, UAE, Germany, Southern Sudan, Uganda, South Africa, Singapore, the Seychelles, and many others. And also acknowledge there were more than shareholders dialing in from more than 44 towns in this country. I declare the meeting now officially closed and invite the Reverend Evans Miranga to close with a word of prayer. Reverend.
Thank you very much, Chairman. To honor God, I request we stand, been seated for long, as we do the closing prayer. Let us pray. Heavenly Father, we thank you so much for your presence throughout the proceeding of this annual general meeting. We are grateful for the wisdom and the constructive engagement that we've had this morning. And as we bring this to a close, we want to commit all the resolutions that has been passed into your hands. We pray for all those entrusted with their implementation, that Lord, you'll guide every decision, every action, and every step, so that this resolution may be executed effectively. It is our prayer that, Lord, you shall continue to shield us from risk and challenges that may hinder our mission. Continue to grant us strength and resilience in navigating the changing business environment. We pray also for your favor with the regulatory authorities and agencies whose approvals may be required. Lord, we also continue to pray for our shareholders, our customers, employees, partners, investors, communities, and even suppliers, asking for your success in the work before us and for your continued favor upon this organization and all the communities we serve across all our markets. As we depart from this meeting, our God, it is our prayer that you go before us to guide us, behind us to protect us, beside us to support us, and above us to watch over us. Grant us safety in our journeys, wisdom in our decisions, and peace in our heart until we meet again. For this is our prayer of faith, in the name of the Father, the Son, and the Holy Spirit.
Mungu twaomba uilinde Jumuiya Afrika Mashariki, tuwezeshe kuishi kwa amani, tutimize na malengo yetu. Jumuiya yetu sote tuilinde, tuajibike, tuimarike. Umoja wetu ni nguzo yetu, idumu jumuiya yetu.
Equity yetu kweli yatufaa, wafanyakazi na wateja wote, tuko pamoja, lengo letu moja, kuyaboresha maisha ya watu. Mimi ni mwema, wewe ni mwema, twajumuishwa na Equity. Equity yatujali, yatuwezesha, yaboresha maisha ya watu. Mimi ni mwema, wewe ni mwema, twajumuishwa na Equity. Equity yatujali, yatuwezesha, yaboresha maisha ya watu. Kujitolea